Morning, Fractal Effects team. Before we get started, make sure you read the disclosure in the footer section of fractaleffects.com. We're just in the middle of the morning setup. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So let's jump into it. Today we have FOMC meeting minutes later in the afternoon. So we're going to avoid taking a NAS and just focus on U.S. oil. We also today, right now actually, as of 10:30, have U.S. oil inventories report drops. So we're going to wait to see how that affects the market, or I'm going to wait for a confirmation to either side. We have a consolidation happening right here. So power of three, excuse me, we should see consolidation, manipulation, most likely into the blue zone. Right now we have a clean break, and we have a mixed model sell. But we have a clean break to the downside of the manipulation line. So that means the market does want to go up. Most likely, excuse me, one second. Sorry, I had to drink some water there. Most likely back to the blue zone right here. We have our DSD low, blue zone, end dog, and a 15-minute fair value gap. So the market wants to run up into this, be it after a double break, or it wants to hit it and then eventually cause a double break. Well, we'll see. Remember, the double break is not necessarily guaranteed, but we do have a single break, and we've created no 5M fair value gap. Ideally, what I'd like to see is a manipulation move up into this area, and then a double break, and then a retracement to a 5M fair value gap, and then a drop into this 15-minute fair value gap and previous day's low, which is right here. Just gonna have to wait it out. But right now, we still have consolidation. This isn't actually looking any better. On days where we have FOMC, we usually avoid US related assets. Take a look at oil, but with this much consolidation, if I don't see a move and a confirmation soon, like within the next, I want to say, 2 candles, and this might be just one of those days where we don't trade anything. Remember, capital preservation, that's our primary goal. But again, the market is drawn to and pushes from the blue zone. And almost. Keep going. Let's see if we get that bullish confirmation as well along with it. We're using Brent crude oil here as a diverging pair. So there's the blue zone, there's the end dog, and there's your DSD low. They're not always going to be exactly in the same place. So we have taken out these highs. Let's see if that was our manipulation move. Just got to stay patient, wait for confirmation. This is a bit of a weird week, not too much news. On top of that, yesterday, NAS consolidated practically the entire day. We did not get a confirmation until late, and then after that, the market retraced back into our range and then consolidated all the way until, I believe, sometime during London. So again, it's just that kind of a week. And when I see something like this right before open, or a little bit after open, I should say, it's not exactly the most favorable setup. So we did sweep the high, but let's see what happens next if we get that confirmation. Huge drop off. Let's see if this candle pushes us out of this range. Remember, when you're looking at diverging pairs, if one asset hits a particular zone, you can almost assume that the other one's going to react as if it has as well. If we hit the DSD on here, but not here, it's going to, not necessarily, but it can behave the same way. If we hit the blue zone here, so if we look, we hit the blue zone, right? It's going under all of this. You can see there's a blue zone under here as well. And this one stops short of it. So when you're setting your TP to one of our zones, be it the DSD, the blue zone, or the purple zone, if one asset hits it, take TP. The other one might not hit it. The other one might hit another area that's very similar. For example, a 15-minute fair value gap. So when you're looking at diverging pairs, there's always going to be a zone that's similar, but it's going to be a different zone. Might be a DSD here, might be a blue zone on this side. But regardless, once the zone is hit, you take the TP, regardless of which asset hits it. That's the whole point of using diverging pairs. Looks like we're getting a bullet. Like, look at all this back and forth. Went down only to come back up. We might get that bullish confirmation. Looks like US oil wants to hit that blue zone, wants to hit this fair value gap. So US oil just confirmed bullish. And it just touched the blue zone. See if it runs up into that 15-minute fair value gap now. So after confirmation, we get a retracement, and then an extension. There we go, right into the 15-minute fair value gap. So we've left no footholds here. If anything else, what we've done, we have this consolidation. We've just swept out the highs and right into this 15-minute fair value gap and the DSD low. So if we're following the blue zone model, we had a clean MM to the downside, but no foothold yet. And then for the spotlight, we've had a bullish confirmation, but we've already retraced down into it. So we're just going to have to wait and see if a 5M fair value gap is created here, a bullish one. So this inverse fair value gap, so far, is the only one that was created. I'm not the biggest fan of inverse fair value gaps. I like to use them as confluence, but not the be-all, end-all. Paint that one out. Because we're still under the DSD low. And again, we have a sell model. Now that we have a bullish confirmation, we're getting mixed signals. It's playing both sides. I'd like to see a 5M fair value gap created first on this side, and then maybe get above the DSD high to use that potentially as an inverse to climb if we're going to go that route. But right now we have a mixed bias. These two strategies are conflicting. We have a sell model, but our sell model has taken out Asia lows. We have not taken out previous day's lows though. Remember, it's only a sell model until it's not. It's only a buy model until it's not. So when it's swept out, for example, the DSD, previous day's low, and or Asia lows, it's technically delivered and it could start going up. So you got to be cautious here. Ideally, I'd like to, well, yeah, see, we have a bullish confirmation. If we hadn't had this bullish confirmation, I would have liked to seen a double break to the downside. I don't like to see these two models conflicting like that, where you have a sell model and a bullish confirmation. That's technically what we had yesterday in NAS. And I said it from the get-go, it's not a market that I would have traded with all that consolidation back and forth. What happens after we get confirmation? We get a retracement back into the range, into one of these key zones, but there's nothing in here. There's no 5M fair value gap. All we have is this inverse, which isn't good enough for me. That's the first 5M being created, but let's see if it sticks. 3 minutes, 47 seconds left. You got to be able to recognize these conditions and say, this is going to make for difficult trading conditions, and you just avoid that. You got to be smart enough to know that. You want to truly make this your career. That's how you got to treat it. Two minutes, 34 seconds left. I don't know if that fair value gap is going to stay open. At any point, if we get a double break, we can't even trade this. Now we have two conflicting biases. Remember, once you get a bullish confirmation, there's an 80% chance that the bottom of this range will not be broken. But today we have a sell model from the blue zone that might have already delivered. So this could be a reversal that we're looking at. We're also sitting inside of a 4-hour fair value gap. So when we go up to the higher time frame, we're right at this 4-hour fair value gap. So the market could push down from here, which is just more confluence to the downside. And it just closed up that 5M fair value gap. That would have been the only foothold. What we're getting right now is an immediate rebalancing candle. Nothing of interest as of yet. I'm not keen on just jumping into this bullish confirmation. Just consolidating. I'm just not keen on this model. You gotta trust your gut feeling as well. Remember I told you, trading, when you see a setup, it should look easy, obvious. Even after all the models that I've seen, this does not look like something I'd want to trade. And if all of a sudden we got a double break, we technically can't trade that based off of our rules. We'd have a bullish confirmation and then a false day if we broke the bottom of this. Even though that would be in alignment with our sell model, the second you get this bullish confirmation, you cannot sell this market. And there's something about it right now that I don't want to buy it. I'm just going to go up to the higher time frame, the daily. So even the daily is sitting inside of a big, huge daily fair value gap right here. That's daily fair value gap. We just tapped into it. On the 7-hour, we're sitting inside of a fair value gap. On the 4-hour, we're sitting inside of a fair value gap. So there's too much confluence to the downside right now. But we did get a clean MM, just no 5M fair value gap, so there was no foothold entry here for me. But it's moving up. Most likely heading up to this 15M fair value gap. But it's not, it's not a model that I'm comfortable with. Too many conflicting points of confluence. And that's okay. As mentioned before, this bullish confirmation could stick. One of them has to. See, that's the whole point. When you have two conflicting bias from like two different strategies, it's better to just avoid trading. Because one could be like, oh, this was a sell model, and then eventually we broke down and it turned out to be a sell. I should have taken it. No, I got that bullish confirmation. I should have trusted it. I should have gone up. It could go either way. And I trust both of these strategies. So if they're conflicting, they're letting me know that this might not be the easiest trade setup. It could just drop here, come back up. Again, just be like yesterday, where we consolidated majority of the day. We still don't have a 5M fair value gap created anywhere here yet. This one is in the process, but let's see if it even stays open. Same thing on Brent crude oil. That would be the first one. So if it gets above here, above the DSD low, and creates a 5M fair value gap, then it could be going up here, but I'm not interested in trading this market. We'll stick with it just to see where it goes. read it out to you guys, but I personally don't want to trade this market. Two minutes, 29 seconds left. So this could be the first 5M fair value gap created. You get rid of this 15. There was so much consolidation that we don't even have an NYC fair value gap. Three, two, one. So that's our first 5M fair value gap created. Let's just go in and make sure it's done right. I'd like to see the market come back into here and give us a 1M bullish fair value gap. Remember, hit a fair value gap, create a fair value gap. Again, this is US oil on the left, Brent crude oil on the right. Let's see if the market wants to retrace back into here. About 27 minutes left in our stream. Remember, trust your gut instinct. If something doesn't feel right, avoid it. And even if it ends up going in that direction, you can't feel bad about it. So no retracement yet, just continuing to push up. The market goes up and hits the DSD high here, we're done for the day. This is the only foothold that's been created so far. So we are above the DSD high. Just running into this 15M fair value gap. This was the only foothold that was created above the DSD high. Or sorry, DSD low. But it was never tapped. So just hit the midpoint of that 15M. Let's see if that pushes it down into our foothold here. Right now this is comparable to a runaway market. All this consolidation, no NYC fair value gap. Get rid of this. First presented fair value gap, not tapped, and continuing to push. 2 minutes 25 seconds left. Let's see if it leaves this fair value gap open. It's got to hit something. It's going to continue to climb up. So we have left this fair value gap open. Still more interested in seeing if the market just drops right into here. Getting ready for that crossover. 13 minutes left. Again, I'm not interested. Definitely not interested here. Let's see what happens if the market does drop down to here. We have too much of a mixed bag today. I'm just going to jump over to NAS real quick just to see exactly what's happening. Last time I checked, I believe it was a runaway market. So we had an internal model. Internal model is where either Asia is inside London or London is inside Asia. We also had it was a contraction model as well. Same thing, where London is inside Asia. Usually when you have that, the market wants to sweep both sides, or at least return to the blue zone, and that's exactly what happened, or is in the process of happening. Sorry, I'm not sure what happened there. So we're at all-time highs. We did have a double break to the upside. But as mentioned before, when you're at all-time highs, you got to be careful. That was a huge NYC fair value gap. Market came back. Did not quite touch the blue zone. And then we have FOMC meeting minutes in the afternoon. Just wanted to take a look at it. Let's go back to US oil. Market now slowly beginning to consolidate there. I don't know if it's going to come all the way back down here. Just have to wait and see. I just wouldn't be interested here. I want to see at least come back down to the 20 EMA. We only got about 2 candles left. You're going to have days like this. You got to decide. You got to decide if there's enough confluence for you to feel comfortable to take a trade. Or again, if you have two conflicting ideologies, two conflicting strategies. Remember, even if you got in here, with the stop loss down here, that's still not a 1 to 3. You'd have to go all the way to Asia high. London high. This is the low-hanging fruit. Here's your equal relative highs. You could technically sweep here and then drop. This would have been the better entry. If it presented itself, we would have been above the DSD low. That's the first presented 5M fair value gap. 20 EMA, this would have been a good place. Take it from here all the way into here. Not a fan here. Your risk to reward has to make sense. This is our last candle. We'll conclude our session after this. Let's see if it goes up and touches that DSD. Make sure you check us out on the socials. Fractal.effects. We're always uploading certain trades, even on the weekends. Educational material. And there you go. Right into the DSD high. Most likely to take out these highs right here. Didn't really give us much of an entry. That's something I was interested in. And it didn't really come all the way back down to our foothold. But that's okay. Remember, capital preservation is our primary goal. Making money is second. There's the other side of the MM as well, the manipulation move. So we could just sweep these highs and then get a clean setup to the downside, sticking with the original sell model. But obviously that's going to come a little late. Come back and check it out. That's your homework. See if both these strategies were technically correct. Bullish confirmation, extension, past 1 standard deviation. And the blue zone strategy, which was a sell, let's see if it takes out the other side of the manipulation move, sets up with a 5M bearish fair value gap and takes out these lows. Now this has become the equal relative lows, right? But that'll be our session. Check us out on fractaleffects.com, where we teach high probability trading. Please hit the subscribe button and turn on your notifications so you know when we're live. We'll be live again tomorrow. Have a good rest of the week.